Hello, Jim here. I've been trading options for a number of years and I've been able to earn some really good extra income on a monthly basis as well as get better returns in my different accounts. This is both my retirement accounts and my taxable. Now, is this something unique to me? I don't believe so. I believe pretty much anyone can do it. I'm going to share with you a couple of real world examples at the end of the video and talk about safe strategies, how you can do it in a safe way without putting your accounts at risk. So stay tuned. I think you're going to enjoy what I have for you. Okay, let's jump right in. Now, I've been investing for many years, probably started back in the late 80s, and I started out as primarily a dividend investor. I would buy stock, I would look for companies that pay dividends or were growing dividends, and that's what I did for many, many years. Then, about 12 years ago, I decided to learn about what's called covered calls, and I learned about them, I think, in a magazine, and then it kind of spurred my thought process, and I'd look for books. At that time, there wasn't a whole lot out there about how to trade options. So I actually talked to Schwab and learned from one of their brokers on the trader desk how to sell what's called a covered call. Now, you might ask, well, what is a covered call? It's the opportunity to sell someone the opportunity to buy your shares. So it's like they're willing to pay you a little bit of money for that opportunity to buy your shares at a particular price on a particular date. And I did that for many years. Then a couple of years ago, I had a bunch of covered calls get assigned away from me. And I realized I really didn't know what I was doing. At that point, I decided I wanted to really learn how to trade options the right way. And one of the first things I learned when I started to dig deeper, I started to read through books. I started to watch other people's videos and actually talk to the traders on the trader desk, was the fact that you could sell what's called a put. So, like I said before, I've been selling calls many years, but I had never sold a put. So I learned that I could sell a put. And what is a put? It's where you can sell the opportunity for someone to sell you shares and they'll pay you for that opportunity. So at that time, if probably an example would be good. So if you want to own a stock that's, say, $50, you could sell a put at $45 a month out, and somebody would pay you, maybe $100 for that opportunity to sell you those shares. Once I learned that, then I started digging deeper. Well, why would I ever just buy stocks? Why not just sell puts? So at that time, I switched. I started selling puts on stocks I wanted to own, and I found I could get the stocks for cheaper. So, like I gave in just the example a minute ago, I could pick up a stock at 45 by selling a put at 45 on that strike. And at the time when I sold that put, typically the stock was a little bit more expensive, so I was saving. Usually I was trying to save like 10%. So if the stock was 50, I was trying to sell a put at 45, and it worked. It worked out fairly well. I ended up having some stocks get assigned to me. So between the discounted price and the cash that I would pick up from selling the put, it ended up making my cost basis so much less. And in my taxable accounts, it turned into a nice little monthly cash stream. I had cash coming in from the covered calls that I had been trading for many years. And now suddenly I also had cash coming in from selling these puts. And I did that and for a number, probably for the first year. And all I did it was in my taxable account. I did it in my taxable Schwab account. I didn't realize you could do it in your retirement accounts. Now I actually do it not just in my taxable accounts, but also I probably do most of my puts in my retirement accounts. And I found that I was able to do a lot better, not just with this income stream, but my returns in my account were better. I compared my 401k from AT&T at Fidelity, and I did better than that. I compared my return I actually had a financial planner at one time, and I compared my results to his, and I actually did better than he did. So I learned it really worked out in my favor. Now, I'm not a big risk taker. I like to, consistent, slow, and steady. And, I like to own a lot of the companies. A lot of people who trade options, they don't necessarily want to own the companies, they just want to make some income. And that's perfectly okay. I have a lot of people in my membership, that's what they prefer to do. They do more what's called zero DTEs, meaning you're trading just that day and you're actually selling options and closing them during the day and making some income that way. I prefer to go a little bit longer out and I prefer to own the shares. And I found that's worked out pretty well for me. I have a lot of stocks that have appreciated nicely. And if you don't ever own the stock, then you miss out on that appreciation. One of the biggest examples is Nvidia. I think I paid 600 for 10, 12 shares of Nvidia. And I've done really well with it. I think it may be worth 15,000 now or something or 18,000 or something along those lines. And they're not the only example. I've also had Procter and Gamble, Corning, which I'll talk about at the end of the video. So to me, I want to own these companies. I like to say I want to own them forever, but that's not necessarily the case. If the company's doing well, they're profitable, they are paying dividends and growing dividends, they have little to no debt. If all the metrics continue and they're managing the company well, then I do want to continue to own them. And some companies I've owned for many, many years. So it's worked out really well for me in the sense that, it gives me different choices, different income streams. I look at it where I have my income stream from my covered calls. I have my income stream from my dividends. I have my income stream from my puts. And then also, it's almost like an income stream with the appreciation on the stocks that you end up owning. So it really works out in your favor. Now, one thing I did want to mention is I like to find bargains. I like to find companies that are on sale. So I don't just look at those metrics. Are they very profitable? Do they have little to no debt? Are they growing? Do they have good management? But also, are they at a good price? Is the PE relative to their sector in a healthy way? And sometimes you find all the great criteria are there, but then they're too pricey. So I especially look for bargain stocks, and the one I'm going to share with you at the end of the video is one of those. And if I can pick it up at a good price, that makes future appreciation even better. So, and a lot of times when you're trading options, you do have the higher return on investment and the cash that's coming in, but you also have to be very patient. That's one thing I've noticed with a lot of traders in my membership. And I'm going to do a quick sideways here. If you're curious about my memberships, in the description, there'll be links to it. I have 3 levels. I have an investor club level, which you get Patreon and you get all my collections, you get all my trades. Then I have what I call my active trader membership. And with that, you get everything in the investor club, but then you also get Discord and you can communicate with other traders. They share their trades. You can share yours. You can ask questions. If you're a beginner, you can also ask beginner questions. And then I have what's called coaching, and coaching includes, again, both what you get in the investor club and the trader club. But in coaching, you also get 2 sessions with me every month to talk about, how you're doing. Maybe I can help you set goals. Maybe I can hold your hand a little bit if you're brand new to trading options. Pretty much whatever works for you and however I can help you. And I really enjoy doing those. So take a look. It may be worth your while. And as always, please hit that like button and subscribe. I'm trying to get the word out that people can do this. It can really be a life changer. It can help you retire early. It can help you reach financial independence sooner. So just a little bit of tidbits. Now, what I was talking about before is when you're trading options, I work with a lot of different people in my memberships. And one of the things that occurs regularly is people are not patient. Stocks will move up and down. I found that, a stock or an ETF can go in the money for a while and then some good news will come out and it'll pop back out. I found that typically early assignment does not occur unless you're fairly deep in the money. I'd like to use this 10% rule. So if it's a $100 stock that drops to 90, but your strike is 100, that's like 10% in the money. If it gets to that level, then you need to be concerned. But until then, you don't need to be as concerned. I think over the last 2 or 3 years, as I perfected or trying to perfect this 10% scenario, I've only had one stock get assigned early, and that was recently with Airbnb. It kind of surprised me. I actually had rolled it earlier this week, and it still got assigned to me. So it didn't really meet that criteria, but in every other instance, it's worked. So I've had a lot of stocks that have gone in the money and then come back out. I'll also share with you my planning worksheet, and I'll actually talk about a few of those that look like they're going to expire, and they were in the money just yesterday. So I'll talk about those too in the real example. So I just wanted to, mention to people, you have to be patient, you have to be calm, don't let fear overtake you. That's probably the biggest issue with investing overall, not just with options, that people get fearful and they sell, when the stock is low, and then when the market's doing well, they buy high, when you should do the opposite. You should buy low and sell high. So just wanted to share that with you. This next part of the video, I'm going to share with you how Corning went. It's a stock that I picked up. It was assigned to me, I believe, November of last year. And then, like I said, I'll share with you my planning worksheet where you can actually see some of the trades I did recently that were in the money and now have come out. And me just being patient over the last 24 hours has allowed me to probably let 2 or 3 additional positions expire where I keep pretty much all the premium that I brought in. So that being said, let's jump into the next part of the video. Okay, here's Corning. This is a spreadsheet that it was a CSV file that I exported directly out of Fidelity. And we can just kind of work our way backwards. Back on 10/10/23, I sold a put in Corning for $29. I think at the time it was 30, 31, something like that. And I picked up $192 for these 2 contracts. Each contract represents 100 shares. So it was like 200 shares. I was looking at potentially buying 200 shares, and I was picking a strike price, and you can see over here, of $29. Now, it ended up getting assigned to me fairly quickly. 29, it was a good price for Corning. It was trading usually between 29 and 33 in a pretty much slim range. It wasn't moving much from that. So it did get assigned to me. This was in November 20th, so a little bit more than a month after I actually sold the put. And it was 5,800. So for the 200 shares times 29, that's 5,800. Then I sold a call pretty quickly, and I sold it. I went out a little bit farther so I could pick a higher strike price because I knew that if it came back, it was going to jump pretty quickly. So I sold on August 16th, 2024, which literally, is tomorrow. And this is a trade. I believe I rolled it early in August, but I got 198.65. Then soon after that, I got a dividend in March. Well, not soon after it, but then I got another dividend 3 months later. Dividends are typically paid quarterly, so $56, another 56. Then here you can see 8.6. So this was earlier this month. I rolled it. I paid $7.31, but I picked up $9.88, and I rolled it up. So I went farther out. I did go almost a year out, but I increased the strike to 38. Now, again, with the fact that Corning, I also have them in another account. I think I have 400 shares in another account that are also very profitable. So I just knew, or I still know, that they don't, 38's pretty high for them. Now they're actually over 40, but I do think there's potential that they may drop back down around 35. I wouldn't be surprised. But I didn't want them to get called away at 35, especially when they got up to 40. So those are the different trades. Now, if I net those out, minus, what I paid and what the value of Corning is at this time, it's like it's like earning 3,060 or $50, which is almost like a 53% return in the time frame that I own them. Now, at the same time, if I had just purchased the shares and I picked up the dividends, it would have been just the 37% return. And I just calculated that by using the $30 a share minus what they're worth today divided by the original value. And that's how I come up with the 37, which is fairly accurate. So just by selling options, I picked up another 16%. So instead of having a 53% return, if I hadn't sold options and traded options, I would have only had a 37%. Now, with them being $40, I think they're $40.45. I think the calculation's over here. F13. Oh, it's over here. It's $40.45, and that's within a couple hours ago. They do pay a fairly nice dividend rate, and they've been increasing it over the years. When it's in the low 30s, like 32, 33, or $35, it's around a 3.25, almost a 3.5 if it gets right at $30 for the dividend. And again, the payout ratio is fairly low. So they do earn a pretty good dividend. And then I always talk about doubling the dividend. So if you multiply that by 4, this one trade brought in more than the $224, 56 times 4. I brought in, what is that, 257. So I more than doubled the dividend. And that's another thing I like to share with people. If you're selling covered calls, you should be able to double the dividend. So if you're a dividend investor and you're earning 4%, you should be able to earn 8% by selling covered calls. So that's what Corning looks like. That's what a lot of my trades look like. They're kind of in the middle. I've had some like Micron where the return has been even higher than this because Micron has really good premium and really good premium volume or option volume. And NVIDIA, I've done really well with covered calls on NVIDIA, as well as selling. I've got a vertical put credit spread on NVIDIA currently, and I've done really well with it too. Now, if we jump over to, this is my planning worksheet. I use it for each month. And you can see here, this is all 8/16. And here's an assignment. I had Airbnb. Now the market's come back so much, it's almost, I have a small loss with the assignment. So, but that happened literally, I think yesterday or the day before. I also had UPS get assigned to me. But I rolled ACLS, APP, AVGO, which is Broadcom. Now CF Industries, it expires tomorrow, 8/16. You can see over here is the actual expiration. So it's pretty far out of the money. It's currently a little over $80. So it should expire outside the money. This is Cisco, and it was 47.50 is the strike, and it was as low as 45 yesterday. It had earnings yesterday after hours, and it shot through the roof. I believe it's maybe right 49.50 or might have hit 50 today. So I'm going to probably just let it expire. I can't imagine that it would drop majorly tomorrow, but it could. If it does, I might roll it. But currently, I'm planning to just let it expire. I also rolled Chewy. If you're looking for an inexpensive stock, this one is a good one to work with, a 22.50/20. So a $2.50 spread. So for every contract, you only need $250 in capital minus whatever premium you bring in. These are all different positions I rolled, and I'm typically rolling them out to the next month. Unless it's a covered call, I might go farther out. IJR, this is an ETF that I like. It's a small cap ETF, and it's right now around 110, so it's going to expire outside the money. Then I have a Tesla. This is a purchase put for protection. At one point, I was worried about Tesla. I'm not as worried now. And I also have XLE. This is an iron condor that was also in the money as early as the end of last week. And it looks like it's going to expire out of the money too. I believe it's might have hit 90, 91 today. So it should expire outside the money. It's pretty cheap. If there's any chance it's not, I'll probably close it tomorrow. So, and here's UPS. This was assigned to me yesterday, and it like Airbnb with the market doing so well today, it's almost not a loss. So, and you can see for the month I'm showing, and this is probably a lot lower. I haven't updated it. It's probably closer to $1,000 for Airbnb and UPS, but I brought in 59.33 just for August. So I have 2 more weeks of August. So I'll probably add another 4,000. This may be one of my highest months, until you take off, whatever the loss would be. But there may not be any loss. Another one that I rolled recently was Dell, and now what I rolled it down to 105, and I believe Dell is like 110. And I think Airbnb is right at my cost basis now. So this negative 2251 may go away. So, and I share this with my membership every week. I'd make updates to it, clean it up a little bit. I may add more to favorites, trade rankings, checklist, guidelines, goals, and then provide it. Typically it's Sunday mornings, and they can see how I'm doing every month. And I still do this very passively. I do 1 or 2 trades a day, then I'm done. I'm still consulting. I have 2 different clients. One actually is a futures. He's got a futures software package that I maintain for him. And another one is we're going to be competing with DocuSign. So it's a pretty big application that I'm working with this company, and I'm pretty much the core developer that's doing most of the work. So thanks for joining me. This is what I wanted to share with you guys. Let me know what your thoughts are. Do you, how do you manage your trades? Are you panicking? Are you closing with a loss? Are you having what I call rolling mania, meaning you're just constantly rolling to get out of positions? This is where I feel like sometimes fear overtakes people and they jump too quickly and they kind of lock in losses too quickly. So let me know what your thoughts are. Have you run across that too? I typically try to answer all my comments within 48 hours, so I look forward to hearing from you. And as always, thanks for joining me.